Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on gold, the miners, and the dollar. We'll start with the dollar, and it is still weak. So we had our bounce play out, still just another lower high. No surprise there as we were coming off a low. Oversold RSI has cooled off on the daily time frame. So our new resistance is the high of this bounce, 93.88 and 93.89, a little bit of a double top. And it's up to the bulls to form a higher low compared to the low that we've hit here of 92.55, and then try and see a higher high in order to reverse this trend, or at least see a little bit more prolonged upside. So there's our low, high of the bounce, must form a higher low and a higher high to have any kind of confidence in the bulls. Otherwise, we are heading down to lower lows. The weekly time frame is still oversold. It's the lowest RSI that we have seen on the dollar in the past 6-7 years. So we had a bullish reversal candlestick last week. It was not confirmed in any way this week. It's a potential bear flag on the weekly time frame, so we have to be cautious. That daily chart has to get that higher low and higher high to prevent from this being a weekly bear flag. But we look back here, look at how important this support is. If we break this support down here of 92, make that 91.92. If 91.92 breaks, it is a very, very significant bear break on the dollar because of the lack of support on the way up. We just straight up broke out with very little support established. The next clear support I see after 91.92 is down at 87.63. That's a $4 plus move to the downside and a very significant drop. So there is not strong support established under this level, which is why 91.92 is the line in the sand that the bulls absolutely must hold, or it is a very significant shift on this weekly time frame. And that's exactly what the gold and silver bulls want. The precious metals and any commodity wants to see the dollar break that support level. Even the cryptocurrency people want to see this level break. They want a weak dollar as well. So more and more people piling up, wanting a weak dollar, and close to getting that clear break. Gold is still strong, the hourly time frame, higher lows and higher highs ever since we started the most current narrative of the fear with North Korea hitting the market. We've got higher lows and higher highs on the hourly time frame. Very strong uptrend still intact. A little bit of a fake out today where we had the data pre-market that led to a lot of volatility. And we had a key support here established at 1283.50, and we kept holding that support. It was a little bit of a fake out where we dipped below it, and the bulls bought that dip with significant vigor, so to speak, with the high volume. And we are heading back up towards resistance of 1291.94. So the bulls are still in full control. This base down at 1283.50 is a key level for me going forward. But we're on the verge of a key resistance in the daily time frame. We're looking up at this double top at 1295.45 and 1295.98. So we can put a clear resistance level there as well. Bulls have to get over those tops in order to break the downtrend that we are in, because we have our low, high of the bounce, higher low, just barely a higher high. Then we broke the higher low pattern, and if the bulls to recover this significantly up to this point is very impressive. You can see the moves that we have recovered on the daily time frame have been very significant straight shots to the upside in both directions. It's very, very clear trends where the momentum shifts and it goes in one direction for quite some time. And we look on the weekly time frame and we can see it's really months where we had 2 months of bearish action, 3 months of bullish action, a month bear, a month bull, a month bear, a month bull. So just all back and forth, but we have a bullish MACD cross on the weekly time frame, and we are very close to a bull break. And if we get over 1295s, we're looking up at 1337 as the next clear resistance. And the bulls are definitely giving the bears a run for their money here. And if the dollar weakness continues, gold strength should hold up as well. So GDX, bulls finally breaking through some key resistance. You can see how many rejections we had from the low $23 range with upper wicks. We pulled back, we formed a higher low, and now we have our higher high, continuing the bullish momentum. Highest price we've seen in over a month. The next resistance is 23.42 and 23.86. Nice end of the week for the bulls after pulling back, never losing the higher lows on the daily. Key close over the 50-week moving average resistance. That has rejected a couple attempts, 2 attempts back here, and then rejected again last week. Now we closed above that level at the high of this week. The bullish MACD cross, after really just trading horizontal with the red line, is now just crossing that red line bullish, and we are looking at the next resistance of 23.86. And if we break that level, we break this trend more clearly, where we have our clear lower highs break 23.86, and the bulls regain a lot of momentum on this weekly time frame. So that's a very clear level that GDX bulls want to see broken. GDXJ is not quite there yet. It is still weaker, and I've said that far more often than I've said the inverse, with the junior miners being stronger than the senior miners. That's not the case. It's very often in 2017 the senior miners are stronger. You can see the lower highs very clearly have not broken that lower high pattern yet, while GDX has. We also broke the higher low pattern for the bears on this pullback, which GDX did not. So there are two significant differences: a lower low and unable to get a higher high here at the end of the week. The weekly time frame also in a very tight range still. We have higher lows and lower highs. So a tightening range that is inevitable to break in the near-term future. The current range I'm watching is 30.98 support and 35.05 resistance. And we're right in the middle of that range, a little bit closer to a bull break than a bear break, but not as strong as GDX. And I can say that because GDX is at a price right now, and the last time we were in this range was June 12th, and the last time that the junior miners were in this range, really, if they were in the range of hitting June 12th, we would be up in the $34 range right now, which obviously we are not. That's about 3% higher than where we currently stand. So that's what we've got. The bulls are coming up on gold to a key resistance. We're continuing to watch the dollar. I did feel that the dollar would have had an oversold bounce play out at this point. Even if we do break this support, because we are so oversold, I do not anticipate that it is going to be a significant bear break in terms of an all-out dump. It will be a notable bear break, and then we'll look to bounce, see an oversold bounce, and then set lower highs and lower lows and continue weakness. But that's a bit of a familiar scenario where we had on the daily time frame for the dollar back when we were pointing out this bearish reversal head and shoulders pattern. It took a while to play out, but it certainly did play out. We were on this back in March, this bearish reversal head and shoulders pattern. The key bear break, the point I'm trying to make here, the key bear break of support of the neckline of this head and shoulders pattern was 99.23. And let's just look at that real quick. There's your head and shoulders pattern. There's 99.23, your neckline of support right there. And that level broke, but then we bounced for 2 weeks in a row. And everybody's saying, well, why are we bouncing if we just made a bearish break? Well, the RSI at that point was right at 30 and oversold when we were down at the lows there. So we bounced, set a lower high, and then look at the downside that followed. So it was a very valid bearish signal and pattern. It just needed a little bit of time to play out. So my point is, if we see a bear break of that key 91, 92 support level, I don't expect an all-out flush because the weekly RSI is the lowest it's been in 6 years. I would expect an oversold bounce to still occur in the near-term future. So that's what we've got heading into next week for gold. I appreciate you watching. Have a great night.